RTS in the meeting chat. To avoid confusion, it's important that only the person invited to speak does so. Now, Kajida Saeed, our head of corporate finance, will now talk us through the report. But can I just say that, just ask, is everyone via Hannah, is everyone present, or are we still waiting for anyone?
Yeah, thank you, Chair. Everyone we're expecting is here. Very
good. Julia, you've got your hand up. Do you want to say anything?
Yeah, it's just a matter of the meeting itself, because it's, I don't know if it's because it's informal, is not published on the council website, and it's not on ModGov either. I know we have papers, but there's nothing there to indicate that anything's happening. So I was just a bit perplexed that we're webcasting, but we're not.
All right. Well, that's a good point if that's the case. Do you want to comment on that, Hannah?
Yeah, the recording of the meeting will be available on the council's website afterwards, if that's all right with members.
Sorry, the issue is that it's not on ModGov.
I can list the meeting, even though it's informal. The reason it's not listed is because it's not a formal committee meeting, but I can amend that for afterwards if that would be helpful.
Thanks. Thank you.
Rob, have you got something to say?
Well, it was only a question. My understanding was the legislation is that you can't take any decisions other than at physical meetings. So I'm just questioning what possible outcomes we can make from this meeting, as it's informal.
Well, there is this urgent decision procedure, isn't it? That's inbuilt in this what we're doing. Do you want to just comment further on that, Hannah?
Yeah, of course. Thanks, Chair. This meeting, as it's informal, is not going to be a decision-making meeting, as you rightly suggest, Councillor Bailey. This meeting is to discuss an urgent business report, which the Chief Executive, Angie, proposes to approve a series of recommendations for. Angie won't take any decision until the committee has met and provided feedback. So that's the purpose of this meeting.
Yeah, and
does that help clear it up?
Are you okay with that, Rob?
Yeah, no, thank you. I wasn't concerned particularly. I just was aware that there was an issue. Okay, thank you.
Yeah, so those papers, and I think it's been explained in emails that have gone out to all committee members that Hannah has usefully just reminded us of there. So having clarified that, I'll invite Kajida Saeed, our corporate finance head of corporate finance, to now talk us through, please, the report.
Good morning, everybody. So there's a number of attachments to the report that will have been circulated to you that are the main sort of items for you to consider and perhaps make some comments on. And the report specifically is asking you to review the statement of accounts, again, in a sense in that the committee had previously approved the accounts in July, and there's no matters that have been changed in those accounts other than a few disclosure changes which are noted in the report. So there's some minor disclosure amendments that have been made. So the first recommendation is for those accounts to be reapproved, if you will. There are two further attachments to the report that are the management representation letters, and previous committee members will be aware that the external auditors aren't able to audit certain things that they can't collect audit evidence for, and therefore they request for the chair of the committee and management through Angie to provide assurance on those matters, and they are listed in those letters of representation, as they're called, and the committee is usually asked to approve those assertions, and those letters go to Grant Thornton as part of their audit evidence. And the next attachment is relating to a letter that we've received from the Department for Levelling Up and Housing and Communities, which sets out the particular issues experienced by the external audit sector this last year around being able to complete audits on time. And this is part of the reason why we are having a conversation, I suppose, today, is that the external audit was due to end at the end of September under the statutory regulations, which were extended for COVID purposes to the end of September. And Paul might wish to speak to that element when he discusses this next section. The main the main aspect that this report actually presents is the final audit report, and that is kind of new material that you won't have seen previously. And I'll kind of invite Paul to speak to that, if that's okay, because that is new information that the committee will be presented with. So Paul, would you like to take it from there?
Yeah, that's fine. Over to you, Paul.
Thank you very much, Khadija and Chairman. And I'll comment on the DLUC letter afterwards, after I've taken you through the report. And in terms of the report, this is a report that we have to give to those charged with governance, and it's quite a sort of set format in terms the report goes through our audit approach, what we set as materiality for the audit, what are the significant audit risks, what are our findings against those risks, what have we covered on value for money, and what adjustments and errors and things like that we've found. We also have a significant section on estimates. So if I give an overview of the audit and then perhaps pick up a little bit of the detail. So in overall terms, we're very pleased with the audit in terms of outcome, because as you'll see from the report, there are no, Khadija just mentioned, there are no sort of material adjustments to the accounts. Most of the changes that have been made are disclosure related. Our appendices do reflect some sort of control issues that we've identified, some of which will be rectified by new financial arrangements the council's putting in place with a new ledger. So that's fine from our point of view. There was a few issues from previous years that we've sort of focused on, like, for example, accounting for LOBOs, which we report on in the report, which is, we've got no issues with. So that's the sort of overview. So an overview is of a clean audit and a clean opinion. What we have to do as part of our audit is, and I'm probably just worth just talking you through the significant risk areas we have to cover. We've covered management overrider controls. That's a mandatory consideration in all audits, private, public sector, doesn't matter. And principally that looks at your journal arrangement. So we do a sort of risk assessment of journals and a sample testing of journals. No issues of concern have come out of that in terms of what's in those journals. We also look at, in the public sector, one of our main concerns is about fraud, or in all audits there's a concern about fraud. In the public sector, we tend to look at fraud in the context of expenditure. And so we've carried out a number of procedures on expenditure and not identified any concerns in respect of fraud in respect of that. One of the big things we do in public sector work is look at your asset base. You, as a large organisation, you've got a very large asset base, and we've done quite a lot of procedures around your property, plant and equipment, and not identified any material errors there. But that's a very extensive part of an audit these days. And we also looked at your pension liability. So your pension liability is obviously a significant figure, as it is for all local authorities. It's an estimated figure based on sort of actuarial assessment. So there's a number of procedures that we carry out around that. In both the property, plant and equipment work and the pension liability, we use auditor experts to support us in our work. And we've completed those procedures, and there are no issues of significance there. One thing I wanted to sort of draw out to members is about the minimum revenue provision. It's become quite a big issue in local government because of issues about the failure to provide prudent MRP in some local authorities. It's been well publicised. So it's an area we've looked at. We've reported it to you in terms of our assessment of your MRP, and we've essentially assessed your MRP as on the sort of satisfactory but slightly optimistic in the sense slightly lower than we might ideally like, but you've already got a clear plan to move that into a what we might see as a more prudent direction. That's already set out in your plans, so I don't have any concerns about that area, but it's probably a new area that we've just flagged up this year. And obviously the concerns that have been raised about MRP and borrowing and things like that are now being reflected in updated codes from CIPFA and the government in terms of trying to make sure that they can control some items of expenditure, control some authorities' approach to being prudent with their borrowing. In terms of the value for money work, which is part of our requirement.
Paul, can I just interject? Sorry. And I noticed, and it occurred to me anyway, when you're mentioning this technical area of minimum revenue provision, MRP, and Councillor Bailey has put in a chat asking what MRP is. And correct me if I'm wrong, but please can you or Kajida just come in to elaborate? It's to do with appropriate provision for loan debt repayment, isn't it?
That's right. So all councils who borrow money are required to set aside a charge each year to the general fund to cover, effectively reflect the revenue consequences of that borrowing. And the reason it's quite a big issue is that the CIPFA code, which guides how authorities do that, it basically has a top line requirement that you need to set a prudent amount of money aside, and then it has a lot of detailed regulations below that or guidelines below that as to what that sort of means. Now, obviously, my version of prudent, your version of prudent, any people's will have different versions of what prudent means. So the government's concern is that some councils have been interpreting that in different ways. So, for example, some councils have been lending money to companies they've set up for them to go and spend the money and not set aside any MRP. Some councils have bought investment properties, borrowed to buy investment properties and not set aside MRP. Now, in both of those cases, one of the arguments has been, well, we'll get the money back anyway through income from investment properties or through dividends from companies and things like that. They're fine judgments to make as to whether that happens or not, but it has resulted in some councils having not set aside appropriate MRP, the minimum revenue provision, to cover off that debt. So it's very important you borrow money, you pay it back, because you have to pay it back anyway. And what we are concerned about, I guess, is the intergenerational unfairness. So if you're not paying it off today, actually taxpayers down the track will have to pay it off. So that's the reason why there's an expectation that there's a managed process whereby you borrow money and every year you set aside the appropriate provision. As I said, I don't think I have particular concerns about Lancashire. We've flagged up a couple of points, but it's not a concern, and you've got a clear trajectory going forward.
Thank you very. Oh, sorry, go on.
No, sorry, that was all I was going to say on that, Chairman.
Oh, thanks very much, Paul. Are you okay with that, Rob? You're muted. Oh no.
I'm not. I've got a very good idea of accounts, but MRP can mean about three things in my book.
Yeah.
So I would say to officers, if you are using the acronyms, can you just first time you use them, just not go into detail, but just tell us what the thing stands for, so that I'm a lay person.
Okay.
Thank you.
Okay, back to you, Paul. You're going to go on to value for money.
Yeah. So value for money. So for this year, so in previous years, we've had what we've called the sort of binary value for money conclusion, like either a qualified value for money conclusion or an unqualified one. Qualified value for money conclusions have tended to be for two reasons. One, because a council's had a sort of regulatory inspection that's a poor one. So, for example, Ofsted inadequate, that type of thing. Or because of other reasons. So, for example, some of the councils with severe financial difficulties have had a qualified value for money conclusion in the past. The National Audit Office government decided that approach wasn't very effective, and that there wasn't enough detail for members and others to really understand what it actually meant. So, what they've introduced for 2021 is a what they call the value for money assessment, a commentary, a more detailed piece of work which we've commenced, which covers financial sustainability, governance, and the council's arrangements for economy, efficiency, and effectiveness. And so that's a sort of commentary report. Now, because of COVID and various time-ins, that deadline for that work is been pushed back to be 3 months after the audit opinion is signed. Now, in terms of Lancashire, we're not going to be that far behind in terms of delivering that piece of work. We're ongoing with that work anyway, and we should be able to produce a report for officers first to consider, and then obviously go through the member process towards the end of January. But I'm just reflecting that in this particular report in front of you, that work has not yet been concluded, which means we can't certify the audit as closed. In terms, Chairman, shall I go on to the DLUC commentary, or do you want to stop here for any comments on the report?
Well, yeah, members are free to indicate any time if they've got any comments. Okay. Right. So if they haven't, then please proceed.
Yes. So the letter you have from the department about audit capacity reflects, I guess, a long-term challenge that has existed in the audit profession, particularly in the last few years as regulation has increased and capacity has reduced. So if we just go back to July 19, which was the deadline was pre-COVID. In July 19, I think about 80% of accounts were signed off, roughly speaking, that sort of figure, by the end of July, which was the deadline then. In the COVID year, the first sort of year of COVID, 1920, the deadline was pushed back to 30th of November. In that year, 45% of audits were signed off by that deadline, and that reflected partly the more challenging environment of auditing in restrictions, but also further challenges about capacity and the regulatory environment. You roll that forward, as Khadija just said, the statutory deadline was 30th of September. Only 9% of audits were signed off by the 30th of September this year. And again, just reflecting that the ongoing challenges in the market, and actually also, to be fair, the ongoing challenges for local authority finance departments in dealing with more and more demands from auditors about property, plant and equipment and various other things, and of course having their own challenges in terms of their own capacity. And so whilst the county council finance function is of good capacity in terms from an auditor's point of view in terms of supporting our audit and what we require, that's not the case in other places, and that also it has its own reason for delay in audits as well. So we would be further ahead in totality if we didn't have some of those problems as well as some of the high-profile technical issues and high-profile organisations whose accounts have not been signed off for some time. So the department and various other stakeholders are getting together to try and address some of those challenges. There's all sorts of things happening. There's more fees being put into the system, more financial support from government to local authorities to pay for audit fees. There's more training arrangements being developed by SIPFA and others to sort of encourage people to come into the local audit process. We ourselves are doing lots of extensive recruitment, both in the UK and abroad, to bring people into this particular part of the audit practice. But I think it's an ongoing journey. The government are looking to also try and find a way within the framework of auditing standards to perhaps reduce the amount of work auditors carry out on property, plant and equipment and pension liability. Colleagues in finance would have got a myriad of questions from us on that. The important thing that I think government has certainly recognised is that those numbers don't impact on your general fund. So when I talked about MRP, that's like that's real money. That's a real thing. Your property, plant and equipment and your pension fund liability do not impact on your general fund. And therefore, it's almost, some might say, a somewhat esoteric exercise to spend so much time going through things that don't impact on your general fund. But that's a regulatory requirement that we have at the moment. So I think government are looking at that to find a way. Can they look at that in a different way, which would certainly reduce audit time and therefore would reduce the delays in audits being signed off. As we are here at the moment, probably Grant Thornton is now at a place where we probably signed off just over 50% of our audit portfolio nationally, and we have about 40% of the total portfolio. So that's part of that. That's a reflection of where the system is. One final thing is that there's a new tendering process for PSAA for the set of contracts for starting 23-24, and they're looking to encourage more audit firms into the market. There's currently only 5 of us. They're looking to encourage more firms into the market, which we are very supportive of, and we'll have to wait and see if they're able to do that. But obviously, it needs to be more capacity, because it cannot be a good thing that audit sign off is delayed. It's a good governance thing that accounts are prepared promptly and audits are completed promptly. That's an important part of the governance process of sound management for all organisations, and clearly we have not got to that place at the moment with these delays. So I'll stop there, Chairman, and obviously happy to answer any questions.
Thank you very much, Paul. I see, John, Councillor Shedwick, you've got your hand up, so go ahead, please. You're muted, John. John, you're muted. We can't hear you. Good.
2 minutes in the flesh now. Here we go. Yes, we obviously had a training session some months ago, and I think Paul and your officers explained the delays. I think we know that. I think we understand what has gone on there. I think we understand what you've said about the commitment. You have extra commitment for properties, for pensions. We understand all that. And I think the only question I have, dealing with the value for money aspect, does it mean at this meeting today you're giving an unqualified opinion generally?
So I'm giving an unqualified opinion on the accounts. We don't have to give an opinion anymore on the value for money. We just produce the commentary report. So there's only one opinion now. There used to be 2, effectively. There's only one now, and we're going to give that on the accounts, unqualified. The value for money report, when we produce that, what that has is it has 3 sets of recommendations. It has statutory recommendations, or possible recommendations. Statutory recommendations, which is not good, because that's when the auditor takes the most sort of serious action. It has key recommendations, and again, that's probably not good, because that's where we've identified a significant weakness in your arrangements. And then it has improvement recommendations, and they're just recommendations effectively of good practice. Now, whilst we haven't completed the work with you yet, if I was going to identify, if I'd already identified, myself and my team had already identified either statutory recommendations that we needed to make or key recommendations, we would actually brought those to this meeting if we'd identified them already. We haven't identified those already. So when you see the report, based on where we are, and we're pretty near to completing in much of the work, I'm anticipating that our report will just include improvement recommendations. So if you were to make a parallel to the previous system, effectively what I'm saying is, if we did have a qualification or not qualification with this one on value for money, we'd be not giving you a qualification. So it would be unqualified in that sense.
Well, thank you. Then, Chairman, to make progress, I fully understand the need to deal with this finally under the urgent business procedures. And I've looked very carefully at the recommendations. They're very familiar recommendations. And I, for one, would recommend that we do approve these recommendations today.
Thank you, Paul, and John, Councillor Shedwick. Was there anything more you wanted to say, Paul, or for that matter, Kajida? Over to you, Paul.
Nothing other than obviously that in terms of the final processes of signing the audit opinion, obviously the other papers that are on your agenda will obviously need to be signed by officers and sent to me, and then I can release the audit opinion.
Anything you want to say, Kajida?
Nothing further, Chair.
Well, just to clarify things, I noticed that the Deputy Chair of this committee, Rupert, you've got your hand up, and it may be to possibly second what Councillor Shodwick was proposing there. But I just want some clarification on that, and just to round up what my perspective on this is this, that, and it's tied in with what's been said about the VFM value for money commentary that's still outstanding, as Paul Dowsett has outlined, which you said, Paul, we're hoping to complete by the end of January. Now, the next meeting of this committee is at the end of January, actually Monday, 31st of January. So presumably the intention is we would have sight of that at that meeting. And I'm just wondering, if we didn't, does that affect in any way what we're considering today, this report that is explaining what the Chief Executive, Angie Ridgewell, is going to do? I just want to add a bit more before you come in, Paul, or Angie, or Kajida for that matter, because another thing in the recommendations, number 2, is about agreeing the management representation letters, which are to be signed by myself and I think Angie as Chief Executive. It's a matter of obviously the arrangements for actually doing that in person, but no doubt Hannah could explain that to me, perhaps after the meeting. But I just wondered whether the VFM timescale is affecting at all what we're considering today, and also perhaps Hannah and Angie, if necessary, could comment on whether we are expected in this informal meeting to make a decision, because it said before that's not the expectation. Is it a matter of giving just our views, which we have had the opportunity to do, and then what would follow from this is that we will, the officers will put into effect via Angie Ridgewell, the Chief Executive, those recommendations that she's got in that report, and that would then be reported as an urgent decision made, be reported at our next meeting on the 31st of January. Have I got all that correct, Anna, Kajida, and Angie, please?
So, yes, that's correct, Chair. The explanation you just gave is complete. Yeah.
Yeah, Chair, can I just comment on the value for money bit? I probably should have been a bit more precise on that. So yes, we are anticipating bringing that report to the meeting on the 31st. Even if we didn't, for whatever reason, it doesn't impact on where we are now in terms of actions for today. But that is our plan, to bring it to that meeting. So obviously we'll be sharing that draft with officers before that.
I'll bring you in, Rupert, but Kajida, do you want to say something?
Yeah, just quickly on the physical signatures, we've been advised by Grant Thornton there's no need for physical signatures due to current restrictions, and therefore an email confirmation from yourself, Chair, and Angie would be sufficient to confirm. And clearly this meeting is being recorded as well, so that already provides evidence of approval, clearly subject to your approval.
So is that approval for me just verbally like now, or do you want an email from me?
An email will be helpful, I think, for the record. Yeah.
I'll do that after the meeting. Thanks. Rupert, do you want to say anything? Because we've clarified that we don't need to make a proposal and second a motion to decide anything at the moment.
But on that basis, then that's no. I was just going to say I would have seconded Councillor Shedwick's proposal and cognizant of this slightly unusual, unconventional process.
Okay, thanks. I've noted that. I appreciate that. But as we've said, and as Anna has confirmed, what my understanding was. Paul, do you want to come in again?
Sorry, just one small clarification on the signatures. So it's, yes, the email will be to confirm it's your electronic signature, rather than just an email, if you see what I mean.
Okay, I'm sure between myself and the officers we can sort that out. Okay. If there's no other comments, I think we've had a full session. We could possibly finish a bit earlier than the allowed time up to 11:30. Is there any other comments from anyone? There's nobody indicating. Angie, have you got any comments to make at all? I know you've not indicated, but I'll give you the opportunity.
No, I don't have any comments other than to obviously thank the staff who, as always, have done a really brilliant job in putting together the accounts. They are incredibly complex and getting more so, which Paul has referred to. Thanks to the auditors and noting what Paul said, the accounts are in good order. The value for money report is coming at the end of January, and that's looking positive with no significant issues of concern. So based on the conversation that we have had today, I am taking the committee's approval. I know you're not approving the recommendations, but were you asked to approve them, you would approve those recommendations, which therefore gives me authority to sign them off effectively on your behalf. Thank you.
Thanks very much for that contribution, Angie. And now certainly I'm sure the committee members as well as me endorse what you were saying then about the officers and Grant Thornton for their respective work. And indeed, as Paul referred to the capacity of LCC finance staff, that's been proven again this year, because as we've said before at earlier meetings, it's very good that the Kajida and her staff have met completed the draft accounts as early as May, and have answered the auditor's queries subsequently. So thanks again to the officers concerned. So having said that, we'll come to the end of this informal meeting now. Thank everybody for attending, and may I wish everybody a very happy Christmas and all the best for 2022. So
Thank
cheerio,
you,
all the best.
Thanks, Chair. Merry Christmas, everyone.
Thank you. Cheerio. Bye for now.
Bye.
Thank you.
Thank you. Goodbye, everyone.